So I will go ahead now to explain one of the best strategies and bucket option. It requires patience and also would make you a lot of money. You need patience because you need to wait for the market to play out. This this strategy requires that you know about fair value gaps or imbalance or liquidity in the market. Okay, that's just the only disadvantage. If you've never heard these terms before, I urge you to go to YouTube and search for fair value gaps or other blocks. Alright, now we to take advantage of this strategy, we have two charts. You have to create two charts. Click on this button right here and demarcate your chart into two. Okay, and we only pick trades on the 30 seconds chart. So on my right, I have the 3 minutes chart, and on my left I have 30 seconds. 3 minutes is to get the bias of the market, whether we are trading for buy or we are trading for sell, and the 30 seconds is where we carry out the actual trade. The indicators are default Keltner channel on the left. um Sorry, it's not default, I had to tamper with it though. It's set at 14, 9 and 1, very important. And you have the 50 moving average, the 50 SMA. Okay, on the this is just to know whether the market is an immediate uptrend or downtrend. On the third 3 minutes time frame, we have the Keltner channel set to sorry, let me get this out of the way. We have the Keltner channel set to 21, 10 and 2, and we have a moving average 100 SMA, and they have a fractal set to 3 and 3. I prefer it to 3 because it marks the immediate high, low and intermediate. It does a clean job on telling us where the support and resistances are. Now, having said this, okay, like I said earlier, this then we have the stochastic, sorry, we have the stochastic set to 24 and 3 for the 30 seconds, and the RSI set to 14 on the 30 seconds, while the MACD is default MACD on the 3 minutes, and the momentum is set to 12. I use the momentum just to make sure, like for example right now I know the momentum for the sellers are more, even though the market is trying to do a reversal while still trending down. Okay, that's what I'm seeing here with the momentum. Anyways, to use this advantage, to use this strategy to your advantage, you need to know about a fair value gap. And without going into much details to explain what a fair value gap is, I'm just going to show you on the chart. Okay, if you need more information on this, you have to do a research on your own. Let me use the 30 seconds chart to show you. So you take out three candles. So a fair value gap is an imbalance that happens on in between three candles, right? So mark for example this candle right now. I'm not sure if you can see my pen, but this candle, if you can see my cursor on the 30 seconds chart, there is this doji falling evening star shooting whatever, the doji candle outside the curtain, and then there is this big green candle, and there is also the green candle. Okay, in between this candle is where the fair value gap lies. Okay, so I will mark it out with this rectangle so you can see this fair value gap. I call them my kill zone. Once the market gets into these gaps, I start looking for buy. Okay, but to confirm this, we just need to look at the AUD card. We just need to look at the actual 3 minutes because this is where we get our bias from. Okay, and right now What is the market doing? I can't see a clear fair value gap for the buyers. I really can't see one. Okay, so we're not going to take this trade. But even if you want to take this trade, I will tell you how to enter a trade with the fair value gap on the 30 seconds. We are going to get into that later on because obviously you are going to choose some trades. It's important that I explain all these things to you so you understand where these trades are coming from. We get our trading bias from the right, telling us whether to buy or sell, and we are basically picking the trade on the 30 seconds triangle. Now, if you pay attention to, you would know this is a trending market. It keeps going buy, right? And the market is above the 100, telling us that the market is buying right now. We are also reversing according to the MACD, so everything is telling us to buy. Even though our fair value gap hasn't been mitigated yet, it has here, but it hasn't got into our main kill zone. So let's look for a few trades and start picking trades. I'm sorry this video might be a very long video, but it will be to your advantage. I'll try not to make it boring for you. Okay, now pay attention to this fair value gap. We are looking for another fair value gap. So back to the fair value gap, you need 1, 2, 3 candles, and then you find the wicks of the first candle and the wicks of the third candle. That is, the space in between them is what you call your fair value gap. You see, as the market came into this gap, for us, okay, let me just tell you now, we are going to revisit this discussion in the future while I pick some few trades. The best trade to pick would be a trade where, for example, while we're waiting for this market to mitigate inside of our fair value gap, we need this market to exit the bottom Keltner channel. We need for this market to exit this Keltner channel and close outside the Keltner. And at the same time, while the market is now coming up into the Keltner channel, the first candle that closes inside of the Keltner channel would be our buy signal. At the same time, we need for the stochastic to be somewhere down here, somewhere at the overbought, sorry, somewhere at the oversold position coming up, and at the same time the first candle has already closed inside of the Keltner while the market is ascending upwards. That will give us our strategy. That will give us our entry for our strategy, even though sometimes this does not happen. Like right now, we are not seeing any market trying to exit the bottom of the Keltner channel, but you can notice that the stochastic is crossing above. Okay, just because I did not confirm this fair value gap on my 3 minutes chart, I'm not picking it. Okay, that's the reason why I'm not picking the buy signal here. But this market is probably buying. It might not give you another signal. These 2 weeks is an enough signal for you to know that it's trying to respect this fair value gap. Okay, but I won't enter it because there is no fair value gap on the 3 minutes to verify our claim. And that brings me to, how do you now know the market to enter? So we go on our 3 minutes, we scout for a market. We look for a market where a break is happening already. Okay, bear with me. Okay, I've not gotten to the meat of the strategy, and the market is already, the video is already long. Okay, pay attention to this market right here. You will notice a small fair value gap which is already been mitigated and dragged down. Okay, but notwithstanding, we are going to give this candle a highlight. I'm going to remove any chart I'm yet to mark. So CAD JPY, we are going to keep an eye on CAD JPY because I believe a fair value gap is about to form right here. Okay, this being our first candle, this is our second. Okay, the wicks of the first candle, the third candle is still going to form. I'm predicting ahead of time, okay, because this market is selling, already hit the top and is descending, creating this lower low, lower high, lower high. So it's already a downtrend on a downtrend market, right? A downtrend on a downtrend market. So we are going to come back at this. You see how this fair value gap is broken? Okay, so this is already a support turn resistance. You just have to wait for the market to come up here and you sell. But that's not what we are here to do now. Let's look for a trade. First trade we are going to pick. As you can see, the fair value gap already showed itself. Okay, but let's not rush ourselves. The fair value gap is something like this, unless it comes around and mitigates inside here. But this is our fair value gap. Cat JPY has been tagged. Let's continue. CHF JPY. We are looking for a trade. Okay, we are looking for a market break, just like it is happening right now. Okay, here this market was broken and excellent. We have our fair value gap. I'm going to mark it out for you so you can see. I know by the time when I mark it a lot, you would have understand what I'm saying. Even though the zigzag is close, is covering the wicks of the first candle. So my first candle, my second, and my third would give me this fair value gap I'm looking at right now. We are waiting for the market to make its way to the fair value gap. If you also pay attention, there is also a small fair value gap right here, and I think that's what the market is respecting, and I will mark it out as well, notwithstanding. Okay, it's very important, no matter how small, the market must mitigate with the fair value gap. Alright, so when you look here and here, just this small fair value gap, I hope it makes sense. Okay, you will see the market would try to come at it and leave. CHF JPY. Now we have identified a fair value gap on the 3 minutes. We are going to 30 seconds to wait for our entry. Okay, on our 30 seconds, we have to be fast. I want to mark out the fair value gap for you guys before the entry comes. It also helps me as well, this rectangle too. So I'm looking at the fair value gap around this same area, trying to see. We have one, we already mitigated inside one, but that's not what we are looking for because market is yet to enter this fair value gap. So we are looking for a fair value gap above, which is still yet to be mitigated. Okay, we have this one. We have uh we have one here. Okay, which it was already been mitigated but not fully. So if we are being sincere, this is the actual fair value gap remaining. Okay, this is advanced stuff. According to what I explained to you, this would be your fair value gap. Okay, you can still leave it like that and you won't be wrong. And there is also another fair value gap here. Let's duplicate this. There is, I'm looking at every possible scenario. Okay, sometimes you might not even find the fair value gap on the 30 seconds. Don't force it. Okay, what it simply means is there is no more entry left. As you can see, most of this fair value gap has already been mitigated. Okay, this one, I feel like this one will be most likely to be used because it is closer to the upper band of the Keltner channel. Okay, while we are still waiting for that, so this will be the perfect place to enter the sell trade or here. Okay, at any time the market gets to this point, it will have to go down. I don't care what the indicators or whatever is saying, but anytime the market gets to these positions I just marked out, it has to go down. As you can see, it's already tapped here once, I'm not sure it's going to do that again, and it's off to the races. Okay. Where will it start? Where will it continue to go down again from? This is another fair value gap. Okay, this is another fair value gap created on 30 seconds candle, but we are not seeing it here yet. Okay, we are not seeing uh, so like I hope this makes sense. When you see the fair value gap on the 30 seconds, you have to match it with a fair value gap on uh you have to match it with a fair value gap on the we should have entered a trade here though. As you can see, the stochastic was crossing, identifying our fair value gap, and at the same time it hit it and it left. Okay, we didn't mark our fair value gap very well initially, and that's why we missed this trade. It's nothing to worry about once you understand what I'm saying. Okay, if you understand what I'm saying, that's the whole point. We are going to go back to, I think I marked a chart earlier. See here, cat JPY. What were we waiting for earlier? We are waiting for uh, what is this? We have a fair value gap. Why would I mark? Why? Okay, are you serious? There is a fair value gap. I marked it before it created the fair value gap, and there was no fair value gap here. There is no fair value gap here. My bad. Okay, I thought it was, but it came back and filled that spot again and started going down. So there is nothing to trade here. Let's keep following. Still marking before the market close, but let's keep at it. Cat JPY, we are still is still entering the fair value gap already. We will come back. This is how to find the best entry. And with one entry you can double your account immediately because it works. Okay, it works. What we are looking for now is market break just like this one, and we find the recent fair value gap, because most times when the market breaks it retraces before it continues. So what we are looking for is that point where it would get to before it continues on the upper movement, because when you see a structured break, okay, there is a break of structure. In case you're not seeing it, let me get the horizontal line. There is a break of structure here. When this green candle closed above all of these, we have our break of structure, and with this break of structure always comes a retracement, and that is where we are hoping to buy our trade AUD NZD. Okay, we are looking for a buy. We are looking for a buy. So we are looking for a fair value gap for buy. This is one. Okay, this is one. You can use this fair value gap, obviously. You can use it this way or we can use it this way. Either way, I prefer this one. Prefer this one though. Okay, this fair value gap. Now this is our fair value gap. You see the market has already entered our fair value gap that we've drawn here. Oh, sorry, this is where the fair value gap. And okay, the market It's already inside of the fair value gap. I drew the fair value gap before the market closed, so that's why there's a little confusion there. But the fair value gap is already crossing. Okay, well, it's crossing. It's trying to checkmate this. It's trying to checkmate this other block. There is another block here. Okay, this line. If the market closed below this line, then you're probably looking for a possible sell. Okay, or the green candle has to be bigger than this. Now, for our buying scenario, as you can see, this fair value gap was totally annihilated. Considering that you're on a downtrend, probably not so surprised. Okay, probably not so surprised, but let's see what happens anyway. Um, because we have a momentum here for the buyers, okay, and the market, according to the MACD, is showing that it's a little retracement with a buy, a little retracement. So this selling going on here is calling it a retracement. But according to our stochastic here, like I told you, for us to buy, the market has to linger below the Keltner channel just like it is doing right now, and it has to close inside of the first candle that closes inside of the Keltner is your entry signal for buy at the same time when the stochastic is about to cross. I entered this trade because my stochastic, my MACD on the higher time frame is still showing me the buy signal, and this is still showing me the buy. That's why I entered this trade, even though it played for a while under here. You see how it came up and closed still inside of the other block. Okay, so remember the best entry is to wait for the first candle to close inside of the Keltner, right, while the stochastic is about to cross this level. Is a very good buyer's entry. There's a very big buyer's entry here, and that's why you saw this. Okay, so that's how you make money with this strategy, even though this one is not as smooth as. That is why I have this entry. That's why I have this entry policy. I'll go over it again. You have a fair value gap, which obviously you have to wait until the market gets into the fair value gap. You come to your 30 seconds and you mark out your fair value gap. That would coincide with this fair value gap. So at the same time the market is playing inside of this zone that you marked on the 3 minutes, you want to see the market inside of the same zone that you marked on your 30 seconds. Okay, that way you know the market is there at that particular time. Now you wait, the market leaves the Keltner channel, okay, plays along, does all these manipulations, and once it starts to come up, you will see the first green candle that closes, or whatever candle that closes inside of the Keltner. The first candle that closes inside of the Keltner will give you your signal to buy. The RSI, I really don't pay much attention, but the stochastic is what would give you your go ahead. Okay, go ahead now and buy, because you already know once the market came into here, once the market broke this structure, you already know the market is going to buy, and it created a fair value gap here. Okay, you saw how it respected the fair value gap. We already know the market is buying, but the question is, where will it buy from? Where is it buying from? You now go down to your 30 seconds candle, wait for the market to play around your zone. I like when the fair value gap is matching with the bottom Keltner channel. Okay, so when this zone is closer to the Keltner channel, I'll wait for the market to exit the zone, play around the Keltner, and when it starts to buy, I buy with the market. See, it's still going up. It's really still buying. Like it's still buying. You could easily buy again at the. You could buy again when the market closes above the Keltner channel. Okay, this would have been another 1 minute entry that would have paid. Okay, but the best entry is here. Okay, let's find another strategy. Let's find another signal. Even here right now, okay, it did not break. It did not break it. Okay, if it had broken this structure, one would say it broke the structure though. Okay, with a fair value gap actually. But let's not trade another one here. Let's find another market. Let's find another market. This card CHF is still playing around. Let's find another market. Okay, I marked this out earlier, card JPY, and it has been mitigated a lot of times. Whoa, we missed a lot of trades there, but let's leave that for now. You see, this market was mitigated afterwards. Shit, we missed that one too. Alright, we're probably going to wait for we have this what's it called? CHF JPY. I should put you there. Okay, we're waiting for the market to mitigate here. This one has already been taken down. It couldn't bring it lower than this, so it's going for a higher liquidity. So probably a lot of orders are here that would take this market downwards again. Still respecting our fair value gap. Okay, still respecting our fair value gap, but we already made our money, and let's leave that one for next time. Okay, we could wait for this, or let me just, for the sake of this, the length of this video, let me find another trade and pick another trade. I'm sorry I had to go into depth to explain. Alright, we have a perfect trade about to play out if it's not playing out already on 30 seconds, but let's mark it out. Here we have a fair value gap. We have fair value gap on a selling market, right? Euro try. What the hell? What currency is this? Euro try. Now we are looking at a fair value gap which is trading inside the fair value gap right now. Awesome. Okay, so the fair value gap we have is this one. We have this fair value gap. Uh, we have this fair value gap. Okay, we have that fair value gap which the market is going into right now. The height of it is 29.497. 29.4975. Okay, so that's it. We have that fair value gap right now. Okay, but you see the stochastic already crossed, signaling that our sell is not going to come up again. It's already tapped into the fair value gap, and the sell I will enter if the market closes outside the Keltner channel. Okay, it's still inside the Keltner. I will enter it when it closes outside the Keltner channel, because it is selling. Momentum here is telling us that the market is for the sellers, and now MACD, even though it's not too strong on the sell, it's still selling. And now I would enter when the market is. This is a sell trade. We're looking for a sell signal. It didn't give us the sell signal that we hoped for, which is the market has to exit the upper curtain while descending, the first market that closes inside of the Keltner would be our sell signal. But I don't think this is the type of sell. Okay, so for this I'm going to, okay, it's probably still going to make it across the, mind you, our fair value gap is still here. Let me extend that a bit. This is trying to play tricks. This is where a lot of people lose money in pocket option. You are trying to find the little trades, but this is how you trade. Okay, you mark out your zones and you wait. So as you can see right here, it probably would just hit, because you can see the Keltner channel is drawing away from the zone. So, but let's still see how it plays out. I don't want to start anticipating the market. This video is getting very long. I'm sorry. I'm so sorry. I hope this video would impact on you guys the way I hope it will. I would I would make I'm going to stop this video here for a matter as a matter of fact. I'll stop this video here, and on my next video I will only record the trades that are picked, okay? If both the losing and the successful one. This demo account is on $304, so keep that in mind. I would record another video and send, but this time around it will just be about the trades, the successful, like the whole trade, how I managed to grow this account using this strategy, just this strategy. Okay. I hope this video will just serve as a guidance on how to use this strategy. Okay. Thank you for watching.